the stock market and the bond market were both weak. In particular, the bond market, but the dollar was also weak. So you had weakness in stocks, weakness in bonds, weakness in the dollar. The one place we saw strength was in gold. Now, not a lot of strength. Gold was up maybe $6 on the week, but still, given the fact that everything else went down, I think the fact that gold managed to go up.
Economist and gold enthusiast Peter Schiff has once again expressed concerns and issued warnings about the state of the U.S. economy. The price of gold increased by about $6 for the week. On Friday, the price of gold rose by $3.80, which was the largest one-day increase in gold prices since March. Peter Schiff mentioned that despite gold stocks experiencing gains on Friday, they were still down by approximately 2% for the week. June was a fantastic month for the stock market, particularly the Nasdaq, which was up 12.8%. The strong June helped power stocks higher through the first half of 2022. The S&P 500 was up 15.9% through the first 6 months of 2023. According to Wall Street Report, stocks fell on Friday and finished lower for the week. The S&P 500 lost 0.29% to end at 4,398.95, while the Nasdaq Composite dipped 0.13% to close at 13,660.72. Benchmark 10-year U.S. Treasury yields retreated from a more than 4-month peak, while the dollar slipped 0.9% to a more than 2-week low after the data, making gold attractive for other currency holders. Another data shows that the gold price rose after mixed U.S. jobs data on Friday, adding $1 for the week to the precious metals U.S. dollar value and rallying 1% from yesterday's drop following a much stronger estimate for the strength of the U.S. labor market. According to Peter Schiff, the increase in gold has led to a decrease in the value of the dollar. He sees this as negative news for the U.S. markets, but at the same time, he believes it indicates positive momentum for gold and gold stocks. He believes that the current situation presents a favorable opportunity to consider purchasing gold. He emphasizes that the price of gold has demonstrated stability around 1900 and has not experienced a significant decline below that level. Despite concerns about gold not reaching 2000, Schiff highlights its resilience in holding steady around 1900. Here are a few glimpses from the discussion that we'd like to show you. Before we proceed, make sure to subscribe to the channel and hit the bell icon for more updates.
Gold, again, I said was up about $6 on the week, but all of that rise happened on Friday. We had about a $14 move up in the price of gold. So gold moved up on the week jobs numbers. The dollar moved down on the week jobs numbers. That's what you expect. But bonds sold off. And so stocks sold off. And you got this oil rally. So to me, this is negative for the U.S. markets and indicates positive momentum, I think, for gold stocks. I mean, gold stocks were down on the week. They were all up. They had nice gains on Friday. I mean, gold stocks are among the only gainers in oil stocks. But the GDX and GDXJ were still down on the week, down about 2%. But given how weak the overall markets were, the fact that they weren't down more, I think is a good sign. But I think the fact that the price of gold went up was an even better sign. If the markets recognize that inflation is here to stay, that is a whole new ball game for gold and the dollar. And I think this is a great time, to be buying here. Gold is not breaking 1900. I mean, it closed the week around 1925. I really haven't seen it trade below 1900. So it's in a very narrow range. Yes, it didn't hold 2000. And so a lot of people got bearish on gold because it didn't hold 2000. So what? It's holding 1900. Gold is holding up despite the fact that everybody is optimistic on the economy, optimistic on tech, optimistic that the Fed has gotten the inflation genie back in the bottle. There's all sorts of optimism out there and very little interest in the price of gold or buying gold. And despite all that, gold hasn't gone down. And I think it's holding up a lot better than people give it credit for. And we're getting ready for a big move up.
Schiff cautions that the current market rallies should be seen as bear market rallies. He emphasizes that the markets are overlooking a crucial point: inflation is expected to worsen in the future. The gold bug stressed, the Fed hasn't won. The Fed has lost. The markets just haven't figured that out yet. The Nasdaq 100 index in May rose above a stiff hurdle at the August 2022 high of 13,720, confirming that the downward pressure has faded. This follows a rebound in late 2022, early 2023 from near strong support on the 200-week moving average and a break above the 89-week moving average in April. Peter Schiff asserts that despite the recent short-covering rally, particularly in the Nasdaq and tech stocks, the market has been disregarding the weak underlying economic fundamentals. He believes that the market's rally in 2022 was fueled by false hope that inflation would be effectively managed or controlled.
People are still chasing the tech names, or now the AI names, but nobody is paying attention to the real inflation trade. Nobody is buying the senior miners, let alone these junior miners. That's what you should be doing, right? You need to be looking at where the big money is ignoring, right? That's how you end up making a lot of money. As a speculator, you got to figure out what the crowd is missing, and then you got to get to where the crowd is going to ultimately be before they arrive. I know eventually the markets are going to figure out what I know. They're going to come to terms with the reality of higher inflation. It's going to be reflected in the bond market. It's going to be reflected in the gold market, the dollar, and it's ultimately going to show up in the price of mining stocks. So the crowd is going to figure this out eventually. Financials are going down. You've got bonds falling. That's going to be bad for the banks. It's going to be bad for the overall stock market. We've had this hyped up short covering rally that has surprised a lot of people based on the magnitude of this rally, particularly when it comes to the Nasdaq and the tech stocks. But all the time, the markets have been ignoring the reality of horrible underlying economic fundamentals that should be weighing on the market. Now, of course, the markets got beat up pretty badly in 2022, and so we rallied from probably an oversold condition at the end of that year. But the fundamentals, as far as I'm concerned, got worse, not better. But there was a lot of false hope that the inflation genie was, going to be put back in the bottle based on the fact that, 9% year-over-year CPI gains went down to a 4 handle. But as I've been saying, that's the trough. We're going back up. The inflation curve is going to bend higher, and we're going to start to print numbers with 5 and 6 handles and higher at a time when the economy is going to be weakening, in fact, entering officially a recession, maybe matching what we've unofficially been operating in. Again, if we've got the most bankruptcies since the end of the Great Recession, generally you don't get that happening if times are good.
Today, the gold price is below its recent all-time high but holding above support and could be ready for another phase of growth. Part of the reason for the growth spurt in the last few years has been the concern about an impending recession and the need for a safe haven asset, but the latest pandemic around the globe has also played its part and has made the financial markets full of fear and uncertainty. What is your stance on Peter Schiff's beliefs regarding gold? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.